Hey guys, Mike here with B&B Credit Builders. I'm here today to talk to you about the three things that you need if you're looking to get a mortgage. The three things you need are: number one, you need an appraisal; number two, verifiable income; and number three, a certain credit score. Now let's break this down. Now first, let's talk about the appraisal. An appraisal is what a third-party appraiser hired by the bank says the property is worth based on all the market conditions. So if you're going to buy a house and it's listed at $100,000, but the appraisal comes back and the bank says it's only worth $80,000, you can't get that mortgage unless, of course, you're going to bring $20,000 cash to the closing. Now that's not typical. Most of the time the appraisal matches or is relatively close to the sales price. But it's important to know that appraisal is one part of the puzzle that's going to get you into your dream house. The second part, and in our opinion, is the most important. This is your income. You have to have proof of verifiable income. Too many times at B&B Credit Builders, clients have come in with businesses with income that they didn't fully report on their taxes. The client tells us that they made $150,000 a year, but their taxes only show that they made $70,000. Now, not only could you get into trouble with the IRS, but you cannot lie to the government about your income and then turn around and tell the bank otherwise, because they go hand in hand. So your income needs to be verifiable by a few different ways. We're talking about W-2s, pay stubs, 1099s, and 2 to 3 years of your tax returns. You have to be able to prove your income because that will dictate how expensive of a house that you can buy. For example, if you make $50,000 annually, you won't qualify for a $300,000 mortgage. Now, if you are married, your spouse's income will be considered, essentially raising the overall household income. This could be beneficial for a lot of couples. However, when you are using the spouse's income, you must use the spouse's credit score. And that brings me to the third and final factor when getting a mortgage, which is what we specialize in here at B&B Credit Builders. A lot of people think that credit is the hardest piece of puzzle, but in our opinion, it's actually one of the easiest factors. Why, might you ask? Not only because you have access to credit repair companies such as us, but also your credit profile can be built or repaired quickly. On average, to get a mortgage, you only need a 620 credit score. Now, we don't recommend that here at B&B Credit Builders. We want you to have a 740 credit score or higher because that will get you into the highest tier of lending with the lowest possible interest rate for your home loan. After all, you could save as much as $50,000 by having a lower interest rate by just 1 percentage point. So why would a bank lend a person with a credit score as low as a 620? Well, everyone needs a physical location to live, and the banks know that. Also, the asset that they're lending money on, it's not going anywhere. A house cannot be moved, so the requirements as far as credit score are relatively low when it comes to a home loan, compared to, say, an auto loan. Now, there are a few different kinds of mortgage loans out there. We're talking conventional loans, USDA loans, VA loans, FHA loans, and they all have their own requirements. But here at B&B Credit Builders, we work with the best mortgage brokers in the area. So now that you guys know the three things that you need to get your dream home, we want to thank you for watching. Feel free to like and share this video with your friends and family, and subscribe to our channel for more educational videos on how to master your credit, get loans at the best terms, and build your financial independence for you and your family.